Hey, everybody. Welcome to the morning market briefing. It's Thursday. Ooh, it's tomorrow day. Just hit me. Thursday, April 9th, 2026. Got some burritos coming in pretty soon.
I'd like to be the first to hit you with the hello, friends.
Hello, friends. What's first tea time today?
They've already gone off.
Man.
There were 3 or 4 people out. Max Homo was out, I think, third or second.
Tom gave me a hot tip. Mr.
Jacob Bridgman. If you want to, I'd say bet him for a top 10. Kid's on fire. He's not popular yet, but his worst finish this year is 18th. He won, I think, a handful of times in 25, and he's going to be a new. I don't know if he'll be popular, but he's going to be a new, consistently very good golfer. He won the Genesis this year.
He's very good. His short game is unbelievable.
I think he's ranked first in putting. His approach play is good. He's not long off the
course
tee.
is playing fast.
Yeah.
Course is playing fast. Read a lot of commentary. It was nice and soft coming after the women's amateur tournament, but we've had a lot of sunshine, some cold weather.
It's been very dry.
Greens are running fast.
I bought 200 contracts
on Kalshi.
$2.40.
Man, I might have to. Boys might have to jump in.
I mean, if he just gets into contention, that's going to be a winning trade.
Yep. I like it.
Also, if you want a lottery ticket, I would say Sami Valimaki. He's a Finnish guy. He played pretty well at the British Open. He's a tall, I guess Finn. I was going to say Swede, but the Finnish people aren't from Sweden.
No.
But he's very, very straight off the tee. You can hit the cover off it, if you will. So. But I mean, I don't even think you could bet him on Kalshi. He's probably so far down the list. He's probably plus 80,000 to win, and he's a debutante. But I think he could be in the mix on the weekend, if you will. So those are my 2 hot tips.
There we go.
And also our boy Jackson Harrington, nicknamed Fridge.
Old Fridge.
He's the amateur from the University of Tennessee. So
Old Fridge.
I'm rooting for that guy just because he's got a cool nickname.
Yeah, we need more cool nicknames.
Yeah. We definitely do.
In golf.
Dude Bravo 44 we talked about yesterday. And Fridge. Fridge is a good one.
I like it. All right, we'll wrap it up there. Now let's jump in, Ben. Let's reframe things. I was just on a call talking about outcomes of the ceasefire. It seems so murky right now to even really understand what's going on. I will stand by this, and I don't know if people will agree, but one observation, I was out of the office yesterday. I think people were a little disappointed by a meaningful lack of market sell-off when a civilization was threatened with obliteration. And I think other people were a little disappointed that we didn't get more of a rally on a ceasefire. I would actually say this is a case in which markets, irrational as they may be at times, actually process this pretty appropriately.
Yeah, I mean, I would agree. I think yesterday's market response was definitely underwhelming. There was no buying in the normal course of the day. Certainly, no buying of risk-on trades. The only sectors that were really up over the course of the day were utilities, consumer staples. Tech sold off actually over the course of the day. And then, kind of financials were pretty much flat. But in general, I think that we didn't have the follow-through that people kind of wanted. But essentially what you saw was that people were selling the tech stocks that ripped, probably because now they could finally get out and reframe their portfolios, and buying consumer staples, utilities, and even energy stocks. And I think that was probably a good risk management play from a lot of people. But I don't think that what I really wanted to kind of touch on today was where the path is and what you really need to be focusing on. Because I think if you're focusing on, we had a ship go through, we didn't have a ship go through.
Yeah, we got one.
It's $1 per barrel. It's $1 million. It's, Vance is saying this. And I think you're missing the point. And I think the point is Iran's negotiating and Trump wants out. And if you get those 2 things right, I think you get a lot of the other things right. And then all of a sudden, instead of focusing on each individual ship and the minute by minute, hour by hour, instant live commentary on X, you can actually think about, okay, well, where are we going to be by Memorial Day? And I think that when you start thinking about that, and that's how markets operate, then you have a very different view of the forest than if you're just looking at the tree that's right in front of you.
Yep.
I think this market wants to go up. And
the economy's doing well.
And by this market, I mean everything in the S&P 500 that isn't tech. I think the tech run is mostly done. I think for right now, there's just no enthusiasm there. I was just looking. I mean, the S&P 500 is down for the year. It's down about 0.8%-ish year to date. The equal weight is up almost 3.5%. And if you think about it, and you think about yesterday, people, I think, are looking around. They're like, hey, there are a lot of really nice companies. They've done well when this market has been embroiled, and I want to buy those companies and continue to hold them.
And that's, I mean, the valuation story has got to get reframed at some point, broadly speaking, in the sense that we had earnings kind of come through during this period in which everything was selling off with uncertainty with the war, and it was not a bad quarterly report by and large. And we were very much in that cycle where there was very little good news. There were certainly some winners on the operational side and those that, came out of it okay, but valuations have to be creeping down.
Yeah, and here's the thing, because we're now a week into April. Have you heard of any company warning on the quarter? This is when the warnings would happen. They'd guide down right now. This is what we saw last year with Liberation Day. They would guide down before the quarter and say, we're going to talk a little bit more at the quarter. But right now, things are not good. We're not seeing that at all. I haven't seen one single guide down. In fact, we've seen the opposite. Companies that have reported, Levi, for example, was up, I think, close to 10% yesterday. Even Constellation Brands is flat today, which is, but I mean, they shouldn't really be that impacted. But, and the airlines have only said, yeah, we're going to be passing through higher fuel costs, but things are rocking and rolling. I mean, all the airlines were up double digits the last couple of days. Semiconductor companies doing well. And I think when you put all that together, it fits with the narrative that Q1 is actually good. And we've had ISM numbers over 50 for the last 3 months, which is the first time in half a decade.
I would say a long time.
And then you couple that with the fact that, okay, well, gasoline prices are high now. Are they going to be higher in a month or lower than in a month?
And they're not even as high as they were 3 years ago.
So what's inflation going to do? And I think you put all that together, and it actually paints a fairly positive picture, I think.
Yeah, I think to Tom's point, I think the market, I do think there's an element of the market wanting to rally. I think there's an element of market participants, broadly speaking, people in their 401k that don't want to admit that. There certainly seems to be some disjointedness, in my opinion, from the vibes and the underlying data and the narrative that seems in front of us. And I don't blame people for that. I don't say that to be disparaging or condescending. If you turn on the news, I mean, it's hard to think there's anything positive at all happening.
I mean, perception is reality. If you perceive the markets are in trouble, then it doesn't matter if they are or not. Yeah.
And think about this.
You've got a bank run.
Yeah.
And this is a great example. I mean, think about there's so many examples of this. When the market bottoms, it is not everything solved. Last year, for example, market bottomed, and it's like, oh, well, it's a pause on the tariffs. We're going to be right back here in a couple weeks. That was the bottom of the market for the year last year when the market, hit that level.
1 year ago today, wasn't it?
Yeah, I think so.
Yeah.
And then even during COVID, the market hit the bottom. And then people were saying, well, there's going to be another wave. And there was always another wave. And the waves actually did come, but the market just kept,
people kept talking about it. It's not going to be a V-shaped recovery. It's not going to be this, that, and the other. Man, it was a rocket ship.
And that was juiced by high octane gas from the Fed too. Yeah. But I mean, the point is, and then even the sovereign debt crisis. I mean, the sovereign debt crisis was not solved instantly. In 2011, the U.S. got downgraded. The market was crashing. It was incredibly volatile. And then it was not. And we kind of got the house in order. They made a plan to make a plan in Europe. And people said, well, now they got to actually make the plan. And then they got to execute the plan. But that was it. And what we have right now is a plan to make a plan with Iran. And I think that's all you kind of need to know. And I kind of go back to the biggest point, which is Trump wants out. He doesn't have incredible urgency on this deal. I don't think he really, if he really wanted an incredible deal on this, and I'm sure he and Vance are very closely in communication, why is he not negotiating the deal? And why is he not doing it yesterday? Why is he waiting for Vance to get there tomorrow?
And I think there's two sides of this story, and I know which one we will hear. I think there is a degree to which Trump is now focusing on other things.
The invasion of Cuba.
And the other side of that coin is there's a degree to which he's distracted. And I think everybody that wanted this conflict to resolve quickly will be, pretty close to the front of the line saying, oh, he's just distracted now. He can't even finish this thing out. But the reality is he's turning the page and he's moving on, whether you like it, whether you like what's happened, whether it's transpired. I do think that's pretty well telegraphed, and I think people are missing that.
Yep. I mean, we can even show the tweet, the truth that came overnight.
The shooting stars.
I mean, he said we're going to stay in there, but he also said this when the deal was made, and I think the key element here is what he said at the end, which is, in the meantime, our great military is loading up and resting, looking forward actually to its next conquest. He was already talking about Greenland last night.
Yep. He's moving on.
How many states do we have in the year 2035?
53.
I mean, think about how good the American baseball team is going to be when Venezuela is full, and Cuba rolled in.
And Greenland.
Yeah. Canada.
What sport does Greenland really dominate?
I bet we could improve our curling team.
Do they participate in the Olympics as their own, or would they potentially be part of?
I think they'd be Denmark.
Are they Denmark? It'd be like
because
like Puerto Rico, don't Puerto Rico split off sort of?
Yeah, but then you look at the Great Britain, it's like Team GB.
Yeah.
It's not England.
Which could potentially include Canada and Jamaica and I think many parts of the Caribbean.
Yeah, most of the Caribbean.
Yeah.
Tom, we did get Fed minutes yesterday. What were your big takeaways?
I mean, this is an interesting thing because the major headline, or at least the major takeaway I had, is that the verbiage was that most participants, they like to dance around with their
some, many, most,
a few. Most thought that the war would actually lead to additional rate cuts, which I think, they briefly talked about it on Bloomberg. Nick Timrose ignored it completely and tried to spin it that there were going to be hikes or potentially no cuts. But I think it's interesting that really, if you think about the situation, it was always going to be cuts because you were either going to have the economy crash because everything got crushed by high oil prices, which would necessitate cuts, or you would have it be not so protracted. There's going to be a transitory inflation scenario, and they're going to end up cutting. And so, that's really why I've never really moved off of I think it could be 2, possibly 3 cuts this year. And what we know for sure is when the Fed said that there would be 1 cut, that is not how many cuts they're going to be this year. So I think that the over is definitely the bet to make at this point. You're seeing that already reflected in the 2-year, which has already come down. You're seeing it in futures where now we've moved closer to a half cut baked in on futures. I think that's too low. We got core PCE this morning for February. It came in at 3%, and that's pretty much in line where people thought it would be. This is obviously backward looking, and I think that March is probably going to be higher, but I think that from there, I don't see a scenario where inflation is going to run out of control, particularly because the 30-year mortgage, rocketed off at the start of this war, and that's not going to help home prices. And home prices, as we've talked about, are the most overrepresented piece of inflation for the last 2 years, and eventually that's going to go away. Eventually they're going to realize that these are not real numbers. That number is closer to 0, if not negative, and we're going to end up with a high 1 handle on inflation, and they're going to have to cut. So I think that that's coming towards the end of the year. Obviously, a lot could change. We could start a war with Cuba or potentially Greenland, and that could probably, throw a bit of a wrench in the gears. But I think that that's the logical progression is that we'll see an uptick in inflation, but not on core because that does not include energy in March. And then by the time we hit June, July, I think we're going to see inflation really crater because they're going to have to admit that those numbers are wrong on the housing market. And they've not gotten better. If anything, inflation's gotten lower as a result of the interest rate move than it will be higher as a result of the oil prices.
Got it. Yep, I'm following. Yeah. So you're saying housing outweighs gas?
Yes, and the housing.
And I mean, it certainly does as a component of
personal spending.
Number.
Yeah, I mean, like what people spend on life.
Yeah, so. Yeah. I'll tell you personally that if my mortgage went up 50%, that'd be hurt. I'd be hurting.
It'd be tough. That's how we ended up in 2008.
Yeah,
is when you had floating adjustable rate mortgages
as a percentage of the CPI, and as a percentage of GDP, it's I think like 2%.
Yeah,
and that's all energy. That's oil plus gas.
And we talked about it's historically low as a piece of the S&P 500 too. I mean, it used to be closer to 7, and now it's more like 4.
Yeah. Ben, what other data are we tracking here as the week closes out?
It's all a little bit messy. I think the key element to remember is gasoline prices are going to influence what we're seeing from the March data, whether that's inflation numbers, whether that's Costco came out with just gangbuster sales for the month of March. Traffic was up on an adjusted basis, they had one fewer selling day because of the early Easter. So traffic was up, though, on that. You had acceleration across all of its lines, including center of the store, so not just food, not just gas. So everything was pretty strong there. You don't really want to read too much into that because I know more people go to Costco when gas prices go up a lot because they want to get a deal, and then they just go into the so they benefited from that, I think, a bit. But I also think that a narrative that has not been discussed is the very favorable weather that we've had over the last 6 weeks.
Yeah.
And that's not just here in the Southeast, that's national. And I think they always complain about the weather when it's bad.
And no one says, man, it's been great.
Yeah. And it really has been great. And I think that's definitely when things are a little bit nicer outside, people do their spring/summer refreshes earlier. And I think so maybe we've got a little pull forward from Q2 to Q1. But that doesn't mean Q2 is going to be bad. We also have a federal budget balance update tomorrow. And I think that we're going to run a larger deficit for the first time on a year-over-year basis than we have like over the last 12 months. And the reason for that is tariff revenue came down a bit because of the IEEPA tariffs were struck down. And the second reason for that is that our tax refunds this year are $96 billion. Just in the month of March, $96 billion flowed out of the U.S. Treasury into the form of tax refunds to individuals. That's up from $74 billion last year. So $22 billion increase in tax refunds. So they get a little bit of a better, higher deficit in the month of March, which will juice those numbers. And Q4 GDP was just revised down to 0.5%, which means that we have a lower base on which to grow in Q1. So I think that Q1 is going to be pretty strong. Again, we are not seeing any downgrades really. Like I said, even Constellation, which is getting hit from any number of angles, I think was basically flat this morning. We'll see what's doing after its conference call. But I think it's all things are pretty good. And in the industrial side of the economy, things are improving. And I think that's pretty clear. We heard that from FedEx yesterday, too.
Awesome. All right, we'll wrap it up there. We will be back tomorrow for the Friday call. Hope you guys have a great day. Talk to you soon.